Welcome to Talk Tickers. Today, we're diving deep into the Q3 earnings for Clear Secure. So let's get right to it.
All right, so right off the bat, Clear Secure came out swinging with a solid Q3 beat. They beat on earnings, they beat on revenue. And the market, well, the market loved it. We saw the stock gap up over 15% in the pre-market, a really powerful open.
And you can see why. I mean, that reaction was really fueled by a strong underlying growth story. You've got revenue up a very healthy 15.5% year over year. But for a subscription business like this, the real tell is total bookings. That's your crystal ball, right? It's future revenue, and that grew over 14%. That gives investors some really nice, clear visibility into what's coming.
Okay, so everything's looking great, right? Well, hold on. This is the number that probably made a few people spit out their coffee. A negative $53 million in free cash flow. That's a headline that'll definitely make you pause and ask, whoa, what is going on under the hood here? But here's the thing. When you dig into the details, it turns out this wasn't an operational fire at all. Actually, it's pretty boring. The whole thing was caused by a single, totally predictable payment to a key credit card partner. This is a known, seasonal thing that happens every single third quarter. It's just part of their business cycle.
And this is where the story gets really compelling and, frankly, pretty bullish. Even with that huge cash payment going out the door, management was so confident in how much cash the business is actually generating that they went ahead and raised their full-year guidance to over $320 million. Now, that is a massive signal of confidence.
All right, so the other big thing investors were watching for was gross dollar retention. In any subscription company, you see that number dip and alarm bells can start to go off. And yeah, it did tick down a little bit.
But, and this is a huge but, everyone saw this coming. The company is just lapping a big price hike from last year, so of course the comparison was going to be tough. Management was really clear on the call, underlying churn is totally stable, and in fact, they said recent retention trends are looking pretty encouraging, so crisis averted.
So let's shift gears from the numbers to the big picture story. The CEO, Caryn Seidman-Becker, just nailed it with this quote. It perfectly frames their whole mission. See, the vision here is way bigger than just breezing through airport security. It's about making Clear a foundational piece of your digital identity everywhere.
And the first piece of that puzzle is what they call their automation engine, the new eGates. If you've used them, you know. Members are calling them magical because they're just so fast and predictable.
And get this, they are moving incredibly fast on this. They're already live in 10 airports, way ahead of schedule, and they're targeting around 30 by the end of this year. The plan? A full network-wide rollout by 2026. They are not messing around.
Now, why does this matter so much? It's all about operating leverage. It's the key to the whole story. When you automate the boring stuff, like manually checking an ID, you free up your people, your ambassadors, to focus on high-margin, high-value services. We're talking about things like their premium concierge services, upsells. That, right there, is how you seriously expand your profit margins.
Okay, so that's pillar one. Pillar two is their growth engine, and this is where they expand way beyond just travel. It's called Clear One, it's their enterprise platform for other businesses, and it just had its best quarter ever. They're getting some serious traction here. They're hooking into major healthcare systems like Epic MyChart. They're getting into workforce identity management, and this is so important because it diversifies the whole business. It turns them from just a travel company into a true, broad-based enterprise identity provider.
And looking ahead, the guidance for Q4 tells you everything you need to know. It implies that total bookings growth is actually going to accelerate to almost 17%. That's a huge tell. It shows that the business momentum isn't just stable, it's actually building as we head into the end of the year. Now, the stock's reaction was fascinating. It was a total roller coaster. You had that huge 15% pop at the open, only to see it fade all the way back to flat by the close. Classic sell the news. But then, look at day two. The stock roared back, recovering almost all of it. That tells me the short-term traders got flushed out, and the bigger institutional money stepped in and said, hey, we see the real story here.
So let's put it all together. You've got fantastic execution. You have accelerating bookings that point to a strong future. And you have a really clear path to higher margins through automation. For all those reasons, our rating here at Talk Tickers is a confident outperform.
And that brings us to our final segment, the next call. The big question is, how do you play this? How do you position for what's coming next?
Okay, so here's our wild but plausible trade idea. You have to look past the day-to-day noise and focus on the huge catalysts on the horizon. The thesis is simple. The market is still sleeping on the long-term margin story from the eGates rollout and the absolute monster of a travel catalyst coming in 2026 with the World Cup. So the idea? Buy the January 2027 call options. This gives you a ton of time over 2 years for this whole story to play out. It captures the full benefit of the eGate automation and that massive surge in travel for the World Cup.
And as always, just a final reminder that none of this is financial advice. This is for informational and entertainment purposes only.